So, hello guys. Welcome everybody. No trade calls, no recommendations or response for the own stuff here for educational purposes only. So, just a little chat between traders. Let's do this. Again, if anybody has anything they want me to discuss, feel free. No real schedule, no planning, no timing. We'll keep on going as long as we get questions. I'll probably start with just doing a little bit of an overview on the ES bigger picture, and then we can take it from there to see if we have any questions, right? So basically, where are we and what's going on? Well, you can see that here we had that initial correction off those highs. And what we discussed once we had that in that Monday flush panic lower, right? What we said, well, the easy move to the downside is likely done, right? And here, everybody will be looking for some kind of a bounce. That's that's over 20% correction. That is essentially the 50 back. Of this move from A to B, right at the 50 back, the confluence of this previous high. So that's makes an awful lot of sense for the market to bounce there, right? So again, once we got that move, we said, really, there's no point pressing shorts. We're still in a bear market, so any rally needs to be sold tactically short term. But really, that's that was it for the easy move down, right? In brackets, easy, okay? And you could see, that's also coinciding with a little bit of a panic on the VIX, and bam. So now we're in a little bit in a limbo zone, right? So what does that mean? Well, essentially, all the guys who are buying that retracement, that 20% correction, long only guys, sky's the limit, go back higher. There's no way they're going to change their view that the low is in and we're going back to new highs unless these lows get taken out, right? On the other hand, well, basically everybody's saying, okay, this is a shit show. This is a disaster. We're going lower. We're going to print lower. Any rally is a sale for them, and they're really not going to change their mind unless we trade much higher, right? Probably we have to go back through these highs. So what that means is that especially in these two zones, you've got this whole area where you could call it kind of neutral, and you can call it, don't be confused by velocity of move inside range, because unless we trade aggressively outside of this zone, and unless we get day closes, week closes outside of this zone, well, likely, it's going to be very hard to change anybody's bigger picture view in terms of longs or shorts who've made their beds, right? So looking at it here, just to case in point how nice the move is, you see we've got that correction into the 50 back. We've got back into those highs, and that's really the key area to focus on. Now, one thing which we've been saying is that this low, similar to last August low, was set in the overnight session, right? So it is unusual for a long-term swing high or swing low to be set outside of RTH. So base case assumption would be that that low needs to get retested, okay? And to give you an idea here, a move back through that low, then our base case is that we have to go much lower, right? And we probably have to print in the low fours, possibly threes. But right now, it's really hard to, especially inside this previous month's range, very hard to see anything, right? To say anything specifically. It's just a trader's market, two-side market here. And I think we mentioned this in the last update. We said, watch out for the monthly close below the 10-month moving average, because it's very unlikely that we do not get downside follow-through, and that's exactly what we got. So here the market is a little bit in limbo, and you can see that these technical references are pretty much the same on NASDAQ, on YM, and we just have to be a little bit patient, right? A little bit patient and see what's going on. From the shorter time frame, basically we've had very nice two-sided trading, and what you can see is shorter term yesterday, again, we had this low, and what we discussed in the daily webinar was that this is a beautiful setup to play for this gap fill if we broke back above this line yesterday, and then we'd be looking for shorts into that fill for 5-10 handle reversal. And that's exactly how it played out. Now overnight, despite the fact that Tesla earnings were really nothing to write home about, you've got Elon saying he's going to focus less on Washington. You got Trump saying he's not going to fire at Powell. So bam, you got a gap up and rip. Now, what does this mean? Well, that's still in that choppy zone, but this is the kind of ball underwater action. So once we break up here, it would not be crazy to see us coming all the way back down, all the way back up into this level. But right here, again, all this zone is, don't be confused by velocity of move inside range, simply because nobody's going to really change their mind inside that area. So that's pretty much where we are. In terms of some of the other charts, we've had a nice little reversal in gold, pure reversal, a 1 hour reversal at the 3,500. Usually on these moves, there's really no edge trying to get short. You want to wait for reversals at key round numbers, and then you can try and play that tactically to fade the move. But you would usually expect the 10-day moving average to hold and the upside to continue. And in this environment, there's very little reason for people to want to offload their gold. And shorter term here, I think the easiest way to look at this is look at the 10-day moving averages, right? And as long as we're whichever side of the 10-day moving average we close, then you'd expect the market to try and go for follow through in that direction, right? And you can see here, ES, NASDAQ, YM, Russell, all above, they'll be trying to force their way up to those gap fills higher. And, that's pretty much where we are. I think in terms of other thing we discussed in the last, I think the March update, again, from the beginning of the year, I'm still running shorts on USD JPY. We're short last year. We shorted at the beginning of the year. And again, no real change there. I think, BOJ and government officials are saying they're on track. They're happy with the hiking policy. So our base case assumption is still that we need to print in the 130s, 120s. No real change there. And here we'll have to see how the dollar trades. Now, even though shorter term, you're likely you could easily see a little bit of a correction. It's, it's unlikely that, there's very, very aggressive sustained dollar buying in the short term unless something crazy happens. So here we remain in a trader's market, in a tactical market. I think in terms of equities, we're still in a sell the rip kind of scenario. But in terms of new swings, both for the dollar or equities, we're not high enough to short or low enough to buy. We're kind of in the middle of these ranges, or moves are already in play. So I think right now the focus is going to continue to be on short-term tactical trading. And again, unless you can't, because you can only look at charts at the end of the day, especially if you have the luxury of being in front of the screens during the day, when you've got ES moving the way it's moving, there's really no reason to want to carry overnight risk because you've got so much trading opportunity shorter term. It really doesn't make sense. Now, again, in terms of the bigger picture, you've got some interesting buy opportunities. I think we mentioned in one of those previous live sessions that if you are looking to get back into bigger positions, cash positions, no leverage, you need to have those orders in the system. If not, there's no way you're going to buy them, because they look when you need to buy them is when they look the ugliest. And case in point is you can see this this monthly, now it looks beautiful, but when it was on the lows, when it was back below this level, that's when it looked the ugliest. So on that dip, I bought some of the core positions we're looking to, core trades, swing trades we're looking for the year, brackets jokingly are YOLO trades for the year. So I bought some single stock names. I bought those, NLR, URA, and those are all up and doing fine. Be happy to buy some more if they go lower. But right now, that's what I'm looking at, right? That's what I'm looking at. So I don't know if anybody has any comments or any questions. I was debating whether to do this the live session today simply because there's not that much going on. But I've been very busy, been a little bit sick, so I thought if I don't do it now, then maybe it's going to take another 2 weeks before I can do it again. So you know, might as well go ahead. Maybe what we can look at is some of those tech names. And again, I think in the current environment, there's really no reason to want to be aggressively long tech. But would it be surprising if they bounce a little? Absolutely not, right? So here we have to see Tesla going into the open. You could see that this is a huge, kind of like those equities, right? No man's land. We trade back above 300, then there's clearly possession for a possibility for a very aggressive squeeze. We trade back below these lows, then you'd expect this to trade sub 180s. But right now, could this rip back all the way into these highs, rip 20%? Sure. Does it really change anything as long as we're kind of stuck inside this box? Not really. We got Google earnings on Thursday. You could see it's a similar kind of situation. Pressure down continues. We've bounced hard off those lows, but probably anything that happens in here is don't be confused by velocity of move inside range. Could you see this rip all the way back into those highs? Sure. Does it change anything? Probably not really, right? And that's the situation you've got on a lot of these names. Even if you're looking at Tesla, on NVIDIA. Remember, our base case was if you were looking to try and average in, once we failed, we're looking at 95, and you got a very nice bounce there. But these rips are getting sold, and unless they pull a big rabbit out of their hat, unless something big changes in terms of Washington or China, chances are, again, on all of those lows need to get retested, and then maybe opening up much more interesting buying opportunities lower. Okay. What about, keep in mind, you've got the SNB on deck on Friday, right? So chairman's going to be speaking on Friday. He's clearly not going to be partying and happy, but, what are they going to do? Right? The issue is always on this chart. It's tricky to look at all these spike candles down. There's no such thing as a bad take. You'd expect them to get tested, but depending on the platform, they're going to be different. But the way this is trading, you would expect that at least these lows need to get tested, right? Now, do you really want to trade against the SMB? Probably not, right? A lot of traders basically stopped trading this after the SMB fiasco. URD CHF, basically they killed Swissy. Swissy was one of the most traded, one of the majors, one of the most trading. Now nobody really wants to touch this. So again, I think it's not something I'm interested in again. Negative rates again, possibly, as a private self-directed trader, I have the luxury to not have to have an opinion. So I really, a lot of people get ticked off with me because I always say I don't care. And I just want to trade levels, right? I just want to try allocate capital to interesting locations and trade levels. So is there a possibility to go back to negative rates? Sure, right? Am I going to try and position for that? No, I'll react to levels. But right here, if you're asking me, am I going to trade this? Absolutely not. I'm only going to focus on the other majors. For me, this has turned into kind of like a, banana republic kind of currency. So I don't trade this. I don't want to get caught on this. I don't want to be caught on a central bank headline. But here it looks like, again, unless something changes, as long as people are going to be divesting out of US assets, as long as people are going to be repatriating funds to various countries, as long as people are going to be looking for other safe havens, chances are, Swiss franc is going to continue to stay bid. But you know, SMBs, central banks always say they have your back until they don't, right? And anybody who was trading USD CHF or USD Euro CHF got caught off guard. It's not worth the risk, right? It's not worth the risk. Zero liquidity, stuff going all over the place. It's just brokers going bust. There's really no real advantage to be involved in these. I know retail traders love these, but to me, it just doesn't really make any sense to want to do anything. But would I be I think this is going to print in the 70s, right? I think this is going to print in the 70s. Would I be wanting to get long? Absolutely not. I mean, if you're aggressive and you're trying to trade headlines, what you're waiting here, probably the easiest trade is to wait for a massive flush and panic and then some kind of announcement, and then you can trade it to the long side if you're very aggressive. But, here you're essentially trying to trade against the central bank and trying to short it into a brick wall. Do the brick walls break? Yes. Yes, but it's always very messy. And trust me, over the long term, over 10, 20, 30-year career as a trader, the less you're involved in these situations, usually the better it is. Okay? So that's what I would be saying on Swissy. I mean, if you're looking at Euro, here, this is going to be an interesting one because it's kind of like a lot of the other things. You got a situation where people think this is extended, and sure, it is extended. But here, if you've got a lot of repatriation, you're getting a lot of price insensitive flows, right? So this can remain insolvent longer than this can remain rational longer than you can remain solvent. So you want to be careful. What to look for on here, what you want to look for is any move back towards this 112, 111. Do you see aggressive buying? If you see aggressive buying, then path of least resistance, especially if nothing changes out of the White House, is probably we need to print into the mid 120s. If you get a little bit of a move back down into that 112, 111, and all of a sudden bids don't materialize, then your base case assumption would be something clearly has changed and we're going to print back below 110. But right now, unless something crazy happens, you'd expect this this dollar move to continue, right? As more of the pension funds, whether it's Norway, whether it's Canada, whatever, right? All divest out of the U.S., sell U.S. assets, repatriate money, and have to allocate it somewhere else. You can look at performance of all the other stock markets versus U.S., all the ETFs, sector ETFs, against international versus U.S. this year, and you could see it's telling you the story. That's what's going on. So I think it makes sense to just be tactical, right? Not get caught off guard, and just try and be careful and hold as little overnight risk as possible, because you just have no idea what's going to come out. Look at case in point, 2 days ago, Trump saying he's going to fire Powell, yada, yada, yada. Then the next day, he's not going to fire him. That's wild swings. So it's really hard to, on the turns, right? Whether it's on the roll from highs or whether it's from that bounce on the lows, when you get the real turns, that first part of the move is the easiest one to catch and the one that's usually least affected by choppiness and opposing headlines, right? Once you can see here, once you're off that turn off the highs or off that turn off the lows and you're back into a little bit more mid-range, right? We're kind of like at that 50 back. You're more in a little bit of a neutral territory, and it just becomes very, very messy. Remember, the edge is always at the extremes. So it doesn't mean you can't trade it, but usually the turns at the extremes, that's when you get the most asymmetry. Once you're in the middle, it's really hard to get real asymmetry, especially when you're in the middle of the range, choppy range with, like we've seen this week, going back to very thin volumes and a lot of headline risk. That's where you're more likely to get chopped up. And it's important to understand the edge you have at the extremes. And also in a market like this, the importance is to understand that on the initial panic, You can't trade the same size, the same TPs, the same stops, the same way when you've got a VIX in the 30s, 40s, 50s than when you're trading at a VIX in the teens, mid-teens, right? And in the same way, once you've had that volatility spike and you get used to that action, that kind of moves, and then vol comes back as it should, from the 40s or 30, 50s back into the 20s, low 20s, you can't trade it the same way anymore. You have to really be in a position where you understand those changes and you can pace yourself. If not, you're going to get into a lot of trouble. Okay. Any comments, any questions, anything everybody's looking at? Looks like we don't have many people live today. Probably wrong timing, but I'll post the recording. We can always do another one. So last chance, or we're going to call it a day, and then maybe I'll try and do another one at it, kind of like during New York time or something. Any thoughts on oil? Yeah, well, here on oil, the way we were looking at crude basically was, actually, let's see if we've got a chart that's marked up here. Okay, so our base case was that we're going to trade, well, Trump told you we're going to trade heavy. And what we said was basically the key range here, and we wouldn't be surprised if we're stuck in this range for a long time, is that 70, 60 kind of level, right? Here you've got a lot of, I think everybody, CTAs, everybody's aggressively net short here. So I think everybody who wants to be short is short. And it's going to be hard to get very, very aggressive downside traction unless something happens, right? The risk is that you get a lot of choppiness inside this range that doesn't really resolve and confuses people. But if you think about it, there's really no reason to want to be aggressively long here. But in the same way as just as we discussed on the ES, if you bought this reversal off those lows, there's really, why would you change your mind unless we trade sub 60 or try and take out those lows again, right? You're going to stay long, right? If you're short, you're likely trying to short a move back into the breakout zone. And your base case is, man, unless this trades back above 70, this is still a dog and this still has to go down. You see what I mean? So we're, again, this is another chart where we're in that situation where this whole area is really messy for new swing positions, right? It's not cheap enough to get long. It's not expensive enough to get short again. And likely you're going to see a lot of choppiness inside this area. When does something substantial change? Well, something substantial changes if we can find new sellers below those lows. Going to be a hard call, right? Or if we can find new buyers back above that yearly open, back above that kind of 70 mark to try and press for a move back into 90. But right now, for this to trade, low 50s or back into the 90s, something substantial has to happen. So as long as the market is looking for direction here, we don't have something substantial, I expect this to be a trader's market inside this broader zone, right? And that's going to be probably similar to the ES. Unless something drastic changes, wouldn't be surprised if we spend an awful lot of time trading inside this area. Clearly, the zones are big and you can get a lot of moves, but it's more tactical trading inside range than swing trading. Do you see what I mean? Because both the longs and the shorts have made their bed, and you likely need much higher, much lower for them to change their mind. Does that make sense? So that's the way I would be looking at it. Okay. Any comments, any questions? Okay, cool. Testo, thanks for the questions. Thanks for stopping by. 50/50 in the house. Thank you for stopping by. Nice to see you. Let's see what gives, and I'll try and do another one of these soonish, probably during New York time. Okay? Thank you so much, guys. All the best. Take care. Bye-bye.